Hey everybody, welcome back to the channel. We are continuing our little mini series here on how to start your own dirt company. And today I want to keep this one relatively short and concise on one topic. We're going to talk about what is the difference between a DBA and a sole proprietorship and an LLC and an S Corp and a C Corp, and oh my God. It's all right. Don't have a panic attack. We're going to break it down. So first is the super easy, simple one. This is what I recommend guys who are starting out moonlighting. Get a DBA. DBAs don't require anything special as far as I'm aware. You basically go into your bank and you fill out a form that says you're going to be doing business as, that's what DBA stands for, Joe Blow Excavating Inc. And so what that means now is you can get a check made out to Joe Blow Excavating Inc. and you can take that check to your bank and you can deposit that check into your bank account because you are Mr. Joe Blow. You're doing business as Joe Blow Excavating Inc. Now, I keep saying Inc. Inc. stands for incorporated, and you're not incorporated. So don't throw the Inc. on there. I'm just using it as an example, guys. Come on, don't hold my feet to the fire on this. So that's what a DBA is. Now, advantages of DBA. Really easy to set up. It took you what, 10 minutes to run up to the bank and fill out that form and then submit it, and woohoo, here we go. Now, disadvantages of that. You are not legally protected at all. So guess what? If you swing your mini excavator into Mrs. Smith's house and she decides you're going to pay for that, it's coming out of your personal bank account. And guess what? If you refuse to pay and Mrs. Smith decides she's going to sue you, which is Joe Blow Excavating, she's actually suing you, Joe Blow, personally, which means your house, your cars, everything from an asset standpoint of yours is up for grabs in that lawsuit. So pretty big disadvantages to DBA. But if you're just kind of moonlighting, doing a couple small jobs, some driveways, some culvert work, stuff like that, do you take the risk? Yeah, I would say take the risk. Be careful, obviously, but go dabble because it doesn't cost you anything. You don't trip any wires that's going to make the government say, oh my gosh, this guy's got a business, we need to start taxing him. It's just a very easy way to get started. Now, from there we move into a sole proprietorship. A sole proprietorship is actually where you create an entity, but it's you doing business. You are the entity. It's a little different. It's just a little more, you can think of it as a little more formal version of a DBA. DBA is strictly something with your bank that allows you to deposit checks. A sole proprietorship, you are actually establishing a business as yourself. So it's a little more formal. I believe you get a tax ID number. Don't quote me on that. But you will actually file paperwork with the government so that you are an established entity. You will be a business. Now, advantages of this one, while it's a little more complicated and a little more complex than a DBA, it's really not. It's literally you can go online and fill out a form, boom, you're done, you're in business. Now, the disadvantages are the exact same as the DBA because you are a sole proprietorship. You're not protected at all from being sued, from someone coming after you, from someone wanting their money. Like, you're not protected at all. By the way, this also applies to creditors. So if you go out to the grain pit, we're not in farming, come on now. If you go out to the gravel pit and you purchase $4,000 worth of material and then you refuse to pay your bill, with a sole proprietorship or a DBA, guess what? They're coming after you personally and they're sucking the money out of your bank account, because it's not separate from you. You will file with both the DBA and a sole proprietorship. You're going to file your taxes all together because really, from all intensive purposes, the government, the tax man, everybody sees you as Joe Blow. They don't see you as Joe Blow in business. It's just Joe Blow. So from a sole proprietorship, we move up into an LLC. And an LLC is realistically the route I would recommend everyone go that's going to start. Like, if you're seriously going to start a dirt company, you're not just moonlighting, you're going to go for it, I would highly recommend everyone start an LLC. With an LLC, it's called a limited liability corporation. It's not a full-blown corporation. We're not up there with Microsoft and Amazon and all these. We are a small limited liability corporation. What does that mean? Well, We file paperwork, and this is a little more complicated than a sole proprietorship. You can go online and you can find articles. I believe they're called articles of incorporation. Don't quote me on that, and I'm putting myself on the spot here because I don't have anything in front of me to tell me this. There is a bit of paperwork that you have to download that basically, it's a very loose framework for this is what my company is, this is how we operate, these are the operating officers of the company. You're kind of laying out the basic ground rules and the formula for your business. That sounds really complicated. You can find online templates. That's what I did for my company. You can find online templates. You can download those, adjust things accordingly as you need to make it fit to your business and your business model. And then what you do is you go on to the federal government's website, just Google how to register an LLC. You can go straight in there. You will submit those articles. You'll pay a fee. I want to say it's like 150 bucks. Don't quote me on that. And that's it. You now have an LLC. Now here, you will trip a few wires with the government because you are establishing a separate entity to a degree. This is where we get into the limited liability. So then LLC, because it is a limited liability company, the way this works, or corporation, is from a legal standpoint, we are now Joe Blow and Joe Blow Excavating. So let's go back to our situation where you swung your mini excavator into Mrs. Smith's wall and she's coming after you and she's suing you. Well, in this situation, she's suing Joe Blow Excavating, which is legally not tied and separate to Joe Blow yourself. Ooh, that didn't sound good, did it? Ooh. Excuse me for the foul language. Anyway, Joe Blow as the individual is not getting sued. It's Joe Blow, the LLC, that's getting sued. Now, why is it a limited liability? Why do we use that term limited liability? What is the disadvantage to this? Because so far it sounds like all advantage, right? Because we can go smack into Mrs. Smith's house. She's gonna sue the company. We fold that baby down. We just fire up Joe Blow Excavating version 2 LLC and we're ready to rock, right? Please don't do that. That is the most unethical way of doing business. Please don't do that. Fair warning. I'm just gonna say that. You're an ass if you do that. Anyway, back to our example. So that sounds like it's all great, right? Because we're totally separate. We're two different entities. Well, sort of. Because from the federal government standpoint, from the tax man standpoint, guess what? You're the same. So when you do your taxes, you will keep your own set of books for your business. So I've got a QuickBooks account that I use for Diesel and Iron Productions, and it is separate from all of my personal stuff over here. But when it comes to talking to the tax man at the end of the year, I take all of this stuff, I take all of my personal stuff, I give it to the tax guy and say, okay, what do I owe you? That's how that works. That's why it's limited, is because from the federal government standpoint, they are the same as you individually. That's with an LLC where you are a sole proprietor LLC. I know the federal government makes everything super complicated. You can actually do different LLCs depending on your setup. So if you do a partnership with another guy, now it's separate. Now it's totally separate because there's a partnership. It's handled in a different way. But most of you guys are most likely not going to have a partner when you start this thing. You're going to be a sole proprietor. And so you will form an LLC with the kind of sole proprietor framework. So that's how you go about establishing an LLC. Like I said, you will trip a couple things with the federal government. So you have to pay your taxes. You can't do that whole under the table garbage all the time. You do have to be above board and legitimate with an LLC. I'm not going to get into all of the legal framework there, and you guys can talk amongst yourselves in the comments because we're just giving you some basic tools here. I'm not about to give legal or tax advice or any of that business. Do not hold me responsible for that. So you guys talk amongst yourselves in the comments. But my advice is you need to be above board. You need to do everything on the table when you're running an LLC. Now, from there, what you can do is step up when you grow as a company. When you start getting super large, you do have the option. You don't have to. There's a lot of large dirt companies that are still LLCs and are able to operate under that legal framework just fine. The next step on the kind of ladder, if you will, is moving to an S Corp. And that is where we are 100% totally, fully, wholly independent companies. So with an LLC, one thing I forgot to mention is the way you pay yourself in an LLC is you take what's called an owner draw. So I will transfer money from my business bank account to my bank account, my personal bank account. I don't have to pay myself. I don't have to have a paycheck and pay payroll taxes and all of that. I transfer money over to my account because remember, from a tax standpoint, I am the same as my LLC. So I just do what's called an owner draw, and that's how I get paid. Now, when you become an S Corp, first of all, it's significantly more expensive to form an S Corp. It's significantly more complicated to form an S Corp, and I can no longer just take a draw out of the company. I now have to be an employee and I have to be paid by the company as an employee, which means I'm paying payroll taxes on myself, which means I have to go through all of the hoops to take care of myself as an employee because I'm not part of the company anymore. Or what you can do is you can be, which is most likely as an owner, is you will be on the board and when you give out dividend payments, which is a fancy way of saying, hey, we're gonna take all this extra money in our account and we're gonna split it amongst our shareholders. So you actually own shares in an S Corp. We don't have shares in an LLC. You actually hold shares in an S Corp. And as a shareholder, I will divvy out dividends to myself. And you're gonna pay taxes on that. Just fair warning. But it also means that if I have multiple people involved, which is generally the case with an S Corp, you've got multiple people that are shareholders, you can't just say, hey, Brian's paying himself today. If you do any sort of a dividend payment, you have to distribute equal dividends according to the number of shares everyone holds. So if I have, 100 shares and Matt MF Totten has 100 shares and Rick has 60 shares, I have to pay myself $100, I have to pay Totten $100, and I have to pay Rick $60. None of us can take a payment unless we all get paid according to the number of shares that we have. Again, S Corps are down the road. You don't need to worry about that now, but I do at least want to give you guys some basic knowledge and understanding of kind of what this is and how it works and where you kind of eventually go. So that's kind of the basic framework of how you go about starting an actual on paper company. You'll start with a DBA while you moonlight. I would totally skip the sole proprietorship in all honesty. It doesn't really serve a purpose because once you've tripped that threshold, you're really to the point where you should start an LLC and start to legally protect yourself and your assets because accidents happen. Even when we're super careful, accidents happen and you want to make sure you protect yourself. So as always, I hope this has been helpful and we will continue our little mini series here on starting your own dirt company. So we'll catch you guys on the next Down and Dirty.